What's up everyone, it's Scotty with Money Investing. In this video, we are going to be talking about Qualcomm, ticker symbol QCOM. They are going to be reporting earnings on Wednesday, May 3rd, after the markets close. So in this video, my goal is to break down everything you need to know about Qualcomm before the earnings come out. We're going to go over the revenues, the earnings, the cash flows, the valuation, the balance sheet, and the intrinsic value calculation, and of course go over the technicals later in this video as well. So I hope you guys enjoy it, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time, and the link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the buy and sell alerts, options alerts, trade ideas, and not to mention all the private videos and live streams that we're doing 3 days a week, Monday, Wednesday, Friday, and it's of course the first week of the month. It's the best time to join, so link's going to be down below. So Qualcomm, this right here were the first quarter fiscal year 2023 highlights. Now Qualcomm is in a different fiscal year as opposed to most companies. Their fiscal year is not coincided with the calendar year, so they are going to be reporting for the second quarter fiscal year 2023 tomorrow or Wednesday, May 3rd, and you can see that revenues for the first quarter was $9.5 billion with a GAAP EPS of $1.98 and a non-GAAP EPS of $2.37. Now QCT is their Qualcomm CDMA technology business, which is where their main primary focus is with integrated circuits and actual manufacturing of chips. And QTL is going to be the Qualcomm's technological licensing deals. And that's why you can see the $1.5 billion revenue is obviously a lot less than the $7.9 billion revenue that the company generated. So again, their main focus obviously is on ICs and chips as opposed to technological licensing. But $7.9 billion worth of revenue for QCT, $2.2 billion of earnings before taxes, and that was $2.1 billion of combined automotive and IoT revenues, 15% growth on a year-over-year basis. But they did still decline overall on a revenue basis from same time last year because of some macroeconomic headwinds and the fact that the chip sector, the semiconductors overall, are decelerating at the moment. Now, QTL 1.5 billion was within their guidance range, and EBT margin was 73%. Which is a lot higher because, of course, technological licensing doesn't require as much in cost of operations as opposed to, you can see that 28% was the EBT margin for QCT. Now, other revenue was $2.5 billion, or no, other was basically $2.5 billion returned to stockholders, including $1.3 billion of share repurchases and $0.8 billion of dividends. So the company has been buying back some shares in the last couple of quarters here. So this right here were the actual results. And one more thing I want to mention is that the company Qualcomm is one of the most quality companies in the chip sector for one reason, because it doesn't actually trade at a super high valuation, which we'll get to later in the video. But I wanted to mention that because Qualcomm cannot be clubbed like NVIDIA or AMD or any of the other companies. Now, one more thing is that, of course, they may not have the growth like NVIDIA or AMD does, but the valuation is far more reasonable. It's actually better than Intel and, of course, NVIDIA, AMD. In other words, it trades as a valuation of an Intel, but the company itself is like an AMD or NVIDIA, right? So what I'm trying to say is that it's got the growth potential of like an AMD or NVIDIA, maybe not as high, definitely not as high, but it trades at a valuation like an Intel. So it's actually got, best of both worlds somewhat. Definitely not the growth like AMD and NVIDIA, but close to it, which we'll talk about later in the video. Now, when it comes to the actual guidance for 2023, you'll notice $8.7 to $9.5 billion what they're guiding for, and non-GAAP diluted EPS of $2.05 and $2.25 for the company, which is again what they're going to report on Wednesday, May 3rd, and that's going to be after the markets close. This right here is going to be the breakdown between different segments, and going over to the actual first quarter revenues. We did see a decline in revenues, EBIT, earnings before taxes, and EPS as well. It's not a surprise. Most companies are reporting declines on a year-over-year basis, and of course AMD also did report a decline on a year-over-year basis. It's not a huge deal because we are expecting a decline from AMD as well after this week's earnings. And of course last week we did see Netflix and Tesla and a lot of big tech companies reporting declines on a year-over-year basis. Now, this right here is going to be different segment revenues. Down 11% is the first quarter number, and earnings before taxes was also down 30%, and QTL revenues also down 16%, and earnings before taxes also down 21% for the company. Now, financial strength is not the best, right? It's nothing near compared to NVIDIA or AMD or any of the other chip stocks here. They're trading on over $8.2 billion of cash and cash equivalents and marketable securities with debt sitting at just under $17 billion. So they do have more debt than cash on the balance sheet, unfortunately. Now, more recently, you can see the growth has been very strong for the company. They've gone from 23.5 billion to over $44 billion. That's exactly what I'm talking about with respect to growth here. In the last 3 years has been very, very strong. And gross profit has gone from 14.2 billion to over $25.5 billion. And operating income has ballooned by over 2x, right? So it's gone over 100% from 6.2 billion to 15.8, almost $16 billion. So very strong growth in the last 3 years, more specifically. Net income has gone from 5.1 billion to almost $13 billion in the last 3 years here. Very strong growth. And shares outstanding have gone down from 1.7 billion to 1.1 billion shares outstanding. So again, you can see the growth here in the last 3 years, very strong. Share buyback, EBITDA is growing, margins are growing, and you've got the company also expanding its revenue, earnings, and of course, free cash flows as well. When it comes to margins, again, 57% gross margins, 33% EBITDA margins, 38% EBITDA margins, and 27% net income margins, and a very strong efficiency, 78% return on equity and 23% return on capital, and of course assets as well. So it's a very, very efficient business. This right here is going to be the valuation, which I was referring to earlier. Only 10 to 11 times earnings multiple right now, with the price to sales trading at under 4 to 5, and enterprise value to EBITDA trading at 9 to 10, price to cash flow trading at a little bit over 12.8 to over 10. So we got a very low valuation, with the last 3 years, of course, being very, very strong in terms of growth. Companies buying back shares. The only concerning part obviously has been the balance sheet for the company, where we've got twice as much debt than the cash on the balance sheet. Now, in terms of growth, this is where things get a little bit interesting, because earnings per share expected to grow from $9.34, in fact, decline this year and then reaccelerate moving forward. It's the same story with AMD as well, from $9.34 all the way up to $13.08. And if you plug that number in, it's going to be about 8.7%. So this is expected to slow down in terms of future growth. So that's a little bit of a potential concern, definitely. And that's one of the reasons why it's trading at a low growth rate to begin with. But if the chip sector and the semiconductors actually do start to regain momentum, and if you can see this growth rate at 12, 15, 18%, there's a huge opportunity within Qualcomm for multiple expansion, right? You want to look for stocks that have opportunities for both increasing growth and increasing expansion. Because right now, if you think about NVIDIA, the growth opportunity is there, but there's no opportunity with multiple expansion, because it's already trading at 60, 70 times earnings. How much higher is it going to go, right? So growth is there, but multiple expansion is not. With Qualcomm, you've got the opportunity for both a potential growth. So if this number ends up being, let's say, 12%, 14, 16% in the future, it's going to deserve and trade at a higher multiple. And as a result, when we expand from 10 to 15, that all of a sudden is a 50% growth already, right, for the stock price. So always look for stocks that have opportunities in both growth and multiple expansion, right? So that's why we like to look for companies that are trading at, very low valuations and have the higher growth potential. When you've got higher growth with higher multiple, there's no more room for profitability left, right? The discrepancy happens when a high growth company is trading at a low valuation. That's where the opportunity ends up being. And for Qualcomm, the expectations right now are pretty low at 9%, but this number, if it changes to, let's say, 12, 14, 16% in the future, then, there is an opportunity for multiple expansion. But I'm going to show you that even if you go with, let's say, 8% growth rate for the company, and if you go with 10 times P multiple, we go with a 12% discount rate, 10% margin of safety, we're looking at $85 in fair value for Qualcomm. If we up that number to, let's say, 10% growth, now we're trading at $93 in terms of that fair value. So this right here is going to be, and we also got to account for the share buyback, by the way. So it's going to be almost at $98 per share for Qualcomm. And this right here is going to be that sensitivity grid that you can take a look at depending on the P multiple and the growth rate, where the fair value is going to end up. So right now we're going with 10 and 10, meaning 10% growth rate and 10 times P multiple. We're looking at $98, right? So the thing that I'm trying to help you understand is that now look what happens if the company ends up with a slightly higher growth rate at 12 to 14%, right? All of a sudden, you've got multiple expansion opportunity, and that's going to put us roughly $164 to $188. Multiple expansion is going to give you a lot more upside than growth ever will. That is just based on math, and you can see that from 10 to 20 it can, more than double to 196. But if it can go from a higher 10 to 18%, it only goes from $98 to $140, right? So the growth in expansion of multiple is a lot more than the actual growth in the growth rate itself. So that's going to be the analysis on Qualcomm. Would be a lot more interested at closer to $100, $98 to $100. And this right here is going to be the entire technical breakdown. We've been trading inside this higher high and higher low pattern for some time, and of course we started to break down below this level, and we were trading kind of in that higher low, but then we broke down below this level. Support level is going to stay put at $103. So this right here is where I would be a lot more interested in starting a new position in Qualcomm. I've actually never owned Qualcomm, but this is a company that I do think has a lot of potential moving forward. And we've seen very nice swings here of 30, 35% moves to the upside. But this right here is going to be that level that I'll be paying attention to for Qualcomm. The only concerning thing for me is going to be the balance sheet. That's the only thing that kind of concerns me a little bit, as the debt level is twice as much as the cash for the business right now. And we got a big resistance sitting at roughly around 118 to as much as 123 to as high as 127. This right here, very strong resistance. We've gone rejected at that level not once, twice, but 3 times in the past for Qualcomm. So that right there is going to be that resistance to watch, and support at close to $103. So hope you guys enjoyed this video. Let me know your thoughts down in the comment section below. What do you think about Qualcomm? Are you buying, selling, holding? What are your thoughts? Let me know in the comment section down below. As always, if you enjoyed this video, found it helpful, make sure that you drop a like, subscribe to the channel, and link to our Discord and Patreon is going to be down below if you're interested in joining us. As always, happy investing. I'll see you all in the next video.